What is up, YouTube? My name is Aditya, and welcome back to my channel, The Indian Algo. And in this video, I'm going to be discussing about DR and IDR ranges and how to use them for intraday purposes. But before we jump onto the video, I need you guys to visit this particular channel. The link is down in the description. If you can do so, please go through all the chats here, and you will find a lot of good stuff. So if you see this particular range right here, are you able to anticipate this or not? If you are not able to anticipate this, please go ahead, look at look at the chats right here. I've been updating everything the real time here. So if you see, this was updated around 12:37, the price spiked up. Sorry, I was expecting a spike up, and then if you can see, what did I mention? If price rallies above 50%, this 50% right here, day isn't tradable anymore. Or if you see here, right here, this way, okay, 12:37, right here, this candle spiked up at 12:40. So 12:37, we updated, price breaks above this, the day isn't tradable anymore. There was still trades around here, but after this takes place, the day is not tradable anymore, and this is what you need to understand. If you want to if you want to stay away from these sideways movements, you need to understand these things, or you will definitely fail because you are unable to identify these sideways ranges. Now, what happens right here? If you see, these were my live trades update. Though I do not call out trades, please understand, I do not call out trades, but I tell you the levels to know. Note 17,444, right? This is where initiated the trade around here. Price fell lower, pretty good. Now, even if you go to a day prior, that's probably, one second. So everything is mentioned. Let me just check once again. Yeah, maybe here I want to see this FVG respected. So if you see, I want to see this resisting for a faster run, and the price simply tested, falls down, and look at what happens later on. So this is what you will understand and learn from this particular channel. So it would be really great if you can join this channel, and you'll be understanding a lot of stuff. What I'll do is I'll also try to update about Euro USD and cryptocurrencies, or maybe the scripts that you guys want. You can comment down in the section. Also, I have a forum where I allow you to ask me questions. If you see this, I allow you to ask me questions. If you see here, right here, this is where you can ask me questions, and I try to answer them in good in-depth and good detail right here. So you will be able to understand these things in a much better way. And I make sure that I'm answering everything around here. So yeah, coming back to the video around here. So what is a DR or IDR range? I also call that as, it's not me who call that as a SPOOZ range, but it's there's the name given by ICT, and ICT calls it SPOOZ range. So what do we do here? So you have to go to the time, 5 minute time frame or 1 minute time frame, and you have to mark a range from 9:30 to 10:30. All right. So this is 10:30 right here. This is the range. So you have to mark the lowest point and the highest point of this particular range. Okay, so now you have to use this as an indicator of as an indicator of what the price could do in the entire day. This is what you will be using this in order to understand what the prices could do. All right, so most of the time you will see a fake out. Okay, this is a trading opportunity. Please try to understand this. This is a trading opportunity. This is your complete trading range for the day. If the price tries to stay up out of this range, the prices will catch momentum and continue higher. All right, this is what you need to understand here. This is precisely the 50%, I guess, of this particular range. Yeah, very well. So if you see, it is already plotted in advance by the institutions, by the smart money dudes, that this is what you will be able to identify. And if the price could sustain above this, that's your trade. If the price could sustain below this trade will be a return back to an order block around here, or a fair value gap right here, or a fair value gap right here. Please understand this. It will be a fake out and a return to a fair value gap, a return to a fair value gap, or an order block, which could be this particular level. Price test this, goes back up, comes back down. So this is how you will be using this particular range. And if the price could sustain, see, if, please note this, very important. If the price closes right above here on the 5 minute time frame, very less likely you will see a hunt of this particular low. Very less chance that you will see a hunt of this particular low. So I'll come back here. Let me mark spools range. This is from 9:30 to 10:30. Okay, right here. So if you see this, do you see the price going above, closing above this? No, right? Hence, there is a possibility we can see the low of the day. Now, just see this. Do you see this particular price action around here? The prices are not faking out. The prices are not faking out. One second, sorry. The prices are not faking out. And then what do you see? You see a rally lower. So it's not only a bias. Okay, it's not only that this particular range will help you. You need to have a bias as well. If your bias is bearish, that is when you can see a short trade taking place. If your bias is bullish, that is when you can expect a fake in. Okay, the price to come back inside this particular range and push higher to this fair value gap at least. All right, this is how you will develop your ranges. Let's go back here. Once again, 9:30 is around here. So 9:30 to 10:30 right here. All right. Okay, so this is probably a pretty like this was the day where the markets were not tradable as well, and it was mentioned in this particular channel also. So price spikes up, goes back up, comes here, fills this imbalance right here. Okay, if you see this fair value gap, price comes right to that, goes up, and if you see, once the price closes right here, okay, once the price closes right here, comes back and shoots up. So you need to understand that once the price closes above this level, it's very less likely that it will take out this particular low. There will be chances, but it's going to be very less likely for that to happen. So once again, let's do it here. So the highest point and the lowest point starting from 9:30 and ending to 10:30 right here. So in this case, the day low is again not taken out. The price did close above it, but it came back down. So this is what? This is a fake out trade where the price comes back in, falls down, fills this particular gap right here, all right, and then goes up and be sideways. All right. So this is not sideways, but the price were falling down very well. Now let's see this. So it works in stocks as well, though I don't like using this in stocks. Then you have another 10:30 time frame right here. All right. See what happens next. Just mark this particular range. Do you see a pullback to this particular level right here? Do you see a breakout? Pretty nice breakout. Again, test, spikes up, test, spikes up. So this is your range. You need to understand this. And this is very powerful. You can go to any particular day in the past right here. Let me just move back. I have no idea where I'm going. This is a very big rally, so I'll avoid it because this was the day of budget, right? Yeah. So let's come here. Let's see spools range starting from 9:30 to 10:30, right? So this is 10:30. So I'll mark the low of this particular 10:30. So now you see what happens. Price breaks below, closes below this particular. So if it's closing below, what can I expect? I can expect either a fake out and then the price not take out this high and then it can come down, right? So this is what our focus is, that the high of the day will not be taken out because the closing is right here. Price goes right into this particular order block right here, this particular up candle touches this area, falls down. So that is something that you will have to figure out. You'll have to align with your trade setups. You'll have to use this with the smart money concepts that you're already aware of to be able to take advantage of these things. Now let me take this particular sideways day around here. 9:30 is starting from here. Where do you have 10:30? 10:30 is right here. What happens next? Do you see a fake out, and a trade back into this particular fair value gap? So this is your trade. This is your trade setup right here. If you are only trading these setups, okay, but you will need to identify, prepare confirmations around these setups that this is a spools range fake out and the price comes down. But in this case, if you see the price also breaks below this particular low, right? Because even if it closes above, it breaks below. So it's not a guarantee. However, this will happen probably seven out of, so this will happen probably out of 2 to 3 times out of 10. All right. And that is what you'll have to figure out eventually. All right. So again, this is a very sideways day. Let's see what the price could be. We have 9:30. Sorry. Yeah, we have 9:30 starting from here. We have 10:30 start closing here. Let's mark this. All right. So this is a pretty big range. Do we see a fake out of this range? Yes, we see a fake out, and the price couldn't able to be like go above this particular range for the whole day. So it draws a boundary for you to understand and do what the prices could do. So in this case, if you see, the spools range of this particular day and this particular day was the same, was very similar. Hence, if you see what happens next, like this was definitely used as a very powerful tool here. Nice. Now let's once again have a look here. Let's mark 9:30 and then go to 10:30 right here. Do you see what happens next? All right. Do we see a break above this? No, but this is where it breaks above. It's sustaining, it's not faking out. So if you are able to understand these things, that when it's not faking out and when it's sustaining, that is when you'll be able to take a continuation trade, because see, the prices are sustaining above this. If you can get a trade around this area, that will be your good scalp to the upside. So all you need to do is identify such ranges, take it into consideration, and then trade it for your advantage. Now let's see here once again, 10:30 and then you have, sorry, 9:30 and then you have 10:30 range right here. Price breaks above this particular high. Yeah, we see, look at this area, how many times it's trying to break above this, doesn't do so. And then we saw a good nice breakout and the price simply rallies higher, but that was a probably a special day. All right, so this is what you will need to understand everything. 9:30 right here, and we have 10:30 right here. So the price is inside this particular range. If the price is inside this particular range, you can completely avoid the day because you have no idea of what the prices could do. Okay. If the price either fakes out, take a short. If the price sustains above it, take a long. If the price sustains below this, try to understand if we are supposed to go lower or not, take a short. So you'll have to do all of those things. So this is not a simple strategy. This is an indicator, a time and price based indicator that will help you to take trades and align it with your bias. All right, guys. I hope you like this particular concept. This is where I will end the video. If you like the video, please make sure to hit the like button, share this video as much as you can, and uh, do hit the subscribe button because I have seen that I've been posting a lot of things, but my subscribers are not growing at all. Yeah. So please go ahead, hit the subscribe button, like this video, and comment if you like this particular video or if you want something new for me to make you understand and do a lot of stuff. Thank you so much.